Good afternoon, everyone. So I'll be spending the next 20 minutes or so looking at a more hands-on approach to commodities and grain futures and trying to quantify the fundamental data that we can find in different locations. CQG has historically been more focused on the technical aspects, technical analysis, and the market data delivery. But it's kind of clear that the fundamental data has an equal part in strategies and the way the markets actually move. And we can find a few pieces of information that we can use to put together like a puzzle to be able to help identify which piece of information makes the market move, because you basically have the dollar trying to move the markets and has a high influence on the grain specifically, but also the kind of information like harvesting, planting the crops. So all of this together has to be taken into consideration to try and put models together. And it's also quite important because traders who look at this data have to find ways to make money on a, I would say, slightly constant basis. But the markets don't move and they don't move all the time enough for the traders to make money. So we're going to be looking into very specific aspects of certain commodities, and we'll see that certain commodities move and have specificities even within that commodity. I'll use this one. Okay. Before we go on, I just need to show the disclaimer like anyone else, just to be sure that you understand that I'm not giving any kind of advice, but purely sort of showing the information that CQG provides or even external information that CQG puts within the software. So we'll start with the drought data and the crop condition on corn. And sorry. So the droughts obviously have a direct effect on the prices of various commodities, especially the ones that we're going to be looking at. So obviously, the amount of water that the crops receive has an obvious impact on the yield and obviously the supply of all those commodities. But they're not all affected the same way at the same time. And when we look at the historical data, it's becoming quite clear, especially with the next slide. We'll see that there's actually different things happening at different times in different regions, and that these conditions do not affect the crops equally depending on which stage of the crop condition it comes at. So if it's during the planting, the emerging, the harvesting, obviously things don't really have the same impact. So obviously I don't want to be turning this into an agricultural lesson. This is not the point, but there are a couple of terms that might sound like I'm giving a course on growing products. But we just need to know this because we'll find out that looking at specificities of these time periods has a different impact, obviously. So there's obviously a few places where we can find information on droughts, especially for the US. But the one I'm choosing here is the Droughts Monitor. It's the public website. which is a website where we can find different pieces of information and actually load it into CQG through various means. And it gives quite detailed information, especially for the region where you want to get the data from, the level of drought that that particular region or area is affected by. So we don't need necessarily that much granular data. We'll see that we can actually make do with something a little bit more high level and how it impacts everything. So to start with, we can see here that we have different types of levels of droughts. So the yellow part is sort of the least important. And as we go into the more darker areas, this is where the droughts are more extreme. And we can see that this chart here shows this information for the past 20 years and how it's affecting the different regions in the US. And what we can see, I mean, we're going pretty quickly because we don't really have a lot of time, and we'll see that a little bit better afterwards, is that we see these areas which are a lot more prone to droughts than others. And this is going to become clearer just after that. When we start with corn, we can see that obviously it's not all focused in that region, but the vast majority of it is. So that's the Midwest is where a lot of it, and this is where we're going to focus on. The other areas have minor crop production. So, and what we could see earlier, we can see that actually this region is the least impacted overall over the last 20 years. So although we can see that there are a few areas here which are affected by droughts, and the east and the northeast is also affected by it a lot of the times, especially the south, it's actually not as critical, and that currently, so this is from the 10th of September, we can see that only 18% of the production was affected. So this is, in a way, interesting because this data from the USDA is giving us some clues as to how we're going to be able to put it together and try and model it even if we wanted to. So what we're doing here is we're taking the data that we saw in the previous website and we just transpose it into our charts, and we can see the evolution of the price of corn futures, and the way this may have been affected by droughts with the same severity. So we're basically taking the exact same data and putting it on a time scale with the data itself. The second thing that we see is that we can actually see that the USDA data that we get directly from the source, so you can get it directly into CQG without any sort of second-hand process, is you can get the different stages of the progress of the crop. And it's actually quite interesting because it's never really the same dates. It's never, the planting isn't always exactly at the same date. It can vary from year to year, although it's always around the same time. But at least you can see when things start, when things end, and how they evolve. So really here, what we're basically seeing is the climatic sort of impact. And then here we basically see the evolution of the plantation. On the third diagram, we basically see basically the silking process for this area. So we're seeing how much of the Midwest area is in a process of silking. So it's in a specific time of the year when the corn is at a moment when it can be very critical if a drought occurs. So this is pretty much the moment we want to isolate and find out if droughts are occurring, because this might impact prices. And the last piece of information at the bottom is the price range, so the sort of volatility in terms of simple price that's assigned between the beginning and the end of the silking process. So what we're trying to put together is when the silking process starts, we're going to look at the lowest point until the highest point until the silking process finishes, and that gives us a range for that time period. And a moving average of that, which we'll see is, I would say it's pretty stable. So I'm just highlighting this, so looking at a shorter scale chart where we can see a little bit better the different processes and their activity, and also highlighting the fact that the silking process onto the chart so we can see when it starts and when it ends. So what's interesting here is when we've got this information is we can start identifying patterns which are quite clear over here when you look at these areas and over here as well. So what's happening is there's actually a few spikes, we've got a few exceptions obviously, otherwise that wouldn't be funny. We can see that there's actually something going on just before the beginning of the silking process. So there's like an expectation that something's going to be happening, and we can see the prices being pushed up just before or around the beginning of the silking process, as if people were expecting something to happen or volatility will obviously increase. And what's more interesting, and goes back to the early slide, which is that we know that the droughts do not, or at least for the last 20 years, have not affected corn that heavily, except for this particular point in time. So the expectation is high just before the silking process. And then as the data comes out and that we see that the droughts levels are extremely low, or at least below 20%, this is usually when it's best. If the droughts levels are below 20%, right when we're peaking the silking process, the pressure releases and the price goes back down. Again, with the exception of here, and obviously with the exception of the Ukraine sort of impact. So as long as we have, so that kind of puts it together, and so long as we've got a level of droughts that's lower than 20%, or sorry, even lower than 10%, what we can see is that what we can expect in terms of price volatility is looking at this particular point in time, we've got an average of about 18 to 20% of volatility from the beginning to the end process. So what's good is we know when, because it's already being produced. It's a sort of official data point. And then we know more or less the sort of pattern that emerges, and we also have a way to quantify a move, which is about 20% of volatility from the start to finish. So this gives us a little bit of a reference for the next year. So one of the things that's, taking things into reverse is this is just isolating the time when there are high levels of droughts. So lots of areas affected by droughts in the Midwest. It's really just very, very not frequent. So in this particular case of corn, you basically have, rather than looking when things are bad, you're basically taking it the other way around and looking at it from an aspect of things being good. So if there's no drought, which is more often, you can actually identify something. And then when it is bad, you know that the opposite will be occurring, and the price levels will be on the upside, and the volatility will be much, much bigger. Now, looking at the aspect of wheat, we got the same sort of chart type from the USDA, and here we can see that there's winter wheat and spring wheat. And we'll focus on the winter wheat, but we'll see that compared to the corn production, wheat is a lot more spread out, and pretty much everything except in the Midwest. A little bit of it. So it's completely different, a lot more complex to analyze, because we have a few places with higher levels of production and crop areas. And as we saw at the very beginning, the droughts are a lot more frequent in those areas. And as of the 10th of September, we saw that 57% of the production areas were affected, at least with some level. So if we just take the same type of data, but here we're just, so we have an overview, we have to extend the coverage of the areas we're looking at from the Midwest to the high plains, the west, the Midwest, obviously, the south and the southeast. So each of these represent the drought levels in terms of percentage of those areas that are affected by droughts to a certain extent. And at the bottom here, we'll see different processes which are characterized in orange and in red. So it's basically the times that interest us in that particular aspect. So when is wheat at its most critical point, and when is it most at risk of drought? So I just want to zoom in a little bit more just so we can see those time periods a little bit better, but it's just the same kind of data on a smaller time scale. Sorry, I just want to go back because there's a specific point. So here we're basically looking at the different colors, which are the progresses, and specifically when wheat has emerged, wheat is headed, and wheat is being harvested. So that's the 3 steps. And we can see that it's a lot more complex. There's not a pattern that emerges just as it was on corn, but that there's a lot more variables coming into play. There isn't one area here that dictates what things or how things are going to be looking like. It's more of a combination of everything, because you may have a drought in one location, but it doesn't affect prices so much. But when everything is in line, then you obviously know that something is happening. When we backtest this data, we can actually see that we need a specific level, so we call D3, which is, so 0 is obviously the green, 1, 2, and 3. So the dark brown or black areas are the ones that are extremely impactful on the prices. Even if sometimes you've got, I would say, droughts of a certain level to a certain amount of the area impacted, it doesn't make a huge difference. So areas like these, you really need to have something that's quite high to make an impact on prices. But what needs to be taken into consideration is that it's a lot more difficult to find which of these aspects has the most impact on price, because we have obviously the climatic impact, the droughts, there can be all sorts of other things. The dollar, for example, which we're seeing here, which obviously, if we're looking at the dollar index, just for the sake of being more general, looking at a basket of currencies against the dollar, which will have the inverted impact on the commodities prices, we can see that the dollar has an impact, but it doesn't have an impact that is so strong that it can be the sole reason for it to move. And this is where we go back to the beginning. It's not just one thing. It's a combination of multiple factors. It could be the dollar, it could be the climate, and it could be all sorts of things. So it's just a matter of trying to put it all together to try and find this. So this is where I was showing that when you have the comparison between the price of wheat and the price of wheat in white and the dollar index in green, when the volatility of wheat was through the roof in 2008, we had a dollar index going down, but not with the same magnitude. So it can't be explaining on its own the volatility of the other. So the last thing I'm going to show is a little bit of a sort of different take on soybeans and looking at the supply and use data that we also get from the USDA. So looking at that particular production, it's fairly similar with a little bit more extension compared to corn. And we're looking here at the sort of monthly aspect of it, just to have an overview of the supply and use yield per harvested acre of soybean from 1996. So this data is what we also get from the USDA. And what we're doing here is trying to sort of map the USDA data and sort of create a reference of it to try and look at expectations of prices of soybeans when the data comes out. So it's a lot more, not obviously trying to predict things, but trying to have an expectation of the price movements. So the way we're going to be doing this is we're looking historically, sorry if I can't see very well, but you can see a few data points at the bottom of the chart. So the blue data point is the release with a positive number, and the red one is the supply being negative. So what we're trying to see is when the supply data is positive, how much movement on average do we see on the price historically? And when the data is negative, how much pressure does it create on price historically? And you average this out over the last 30 years, and we're trying to sort of put this onto a chart. We're applying this average onto the opening price of the day to try and find out how much it's going to move. So if on average over the last 30 years, a positive number produced a 0.8% up move, then we're going to average this out and sort of plot it onto the chart from the daily open, and same thing for the negative release. And we do this because the opening price is the stable price of the day. If you used yesterday's close or yesterday's settlement, then there's a potential of gapping between yesterday and today. So you want to be sure that you have something that's stable through the day. So we eliminate the sort of noise of the gap between the day, the previous day close and daily open. And just to show how it shows itself onto a chart, so we get the red dots showing the average of that data and the green dots for the positive. And we can see that it plots onto the chart in a nice manner. So we get a sort of estimated move already plotted onto the chart just at the point of the release, because we need to know if the release is going to be positive or negative, and identify the potential areas where the low or the high could potentially be on the days of the release. So we find something that's plotted quite nicely over time. And that's it for today. So I hope you found something interesting. And if you have any questions, just let me know.